We're seeing the DXY break above a significant area today. So how is that going to affect currency pairs like the euro and the pound as we head into FOMC? That's what we're talking about in today's video. As always, guys, if you enjoy the content, be sure to subscribe to the channel and click the bell icon for notifications. All right, so looking here at the DXY, guys, daily time frame. So this right here, this area between 103.6 and 103.8, this is the region that we've talked about now for the past few days because clearly it has been a pivot here in 2024. So the question now is, where does the DXY close today's session? That's what this is going to come down to. This is not a case where you want to be trading this on the 1 hour or even 4 hour time frame just because this level goes all the way back here toward January and it has been significant on a daily closing basis. If you drop down to a 4 hour time frame, all right, looking here at the 4 hour, you can see how choppy this has been. Now, overall, it has held. However, look at all of these candles through here. Okay, so in my opinion, this is really going to come down to the daily close in relation to 103.6 and specifically 103.8. That's especially true when you consider that tomorrow is FOMC. So we have to expect a lot of volatility here for the DXY going into that event. All right, now what I've mentioned recently too is if you'll notice back here at the start of this year, okay, so this down here was a fake out from the DXY. So we got the move below 101.9, we got the reclaim there, retest right here as new support, and we got the rally. This up here was a fake out above 104.5. So notice back here, this was a critical level going back to last year. We had the sustained break above, sustained break back below, and we got a pullback. Now, if you'll notice below 103, the exact same thing. And I mentioned why these occur in yesterday's video, so be sure to check that out if you haven't already. But 103 was clearly a significant area. We got the reclaim above this here. And so in my opinion, we are looking at a potential rally for the DXY here over the coming days and weeks. Now, the key to this, though, again, is going to be today's close in relation to 103.8. Okay, so let's go ahead and take a look now at the EURUSD and the pound, see how this is affecting those pairs as we head into tomorrow's FOMC. So as we know, the 2022 trend line, this is what we discussed now for the past few weeks. You can see off of that 2022 low, we have the low down here. We've got all these lows through this area, resistance through here. Okay, we got the close above and now the close back below. So once again, we're looking at a fake out here for the euro. Okay, so very similar, basically the inverse of what we're seeing on the DXY. Okay, so if we look here and move in, you can see where this is very similar to what we had here at the start of 2024. So notice the fake out back here, right? Two highs right back here. We got the sustained break above, the sustained break back below on this candle, retest as new resistance. So same thing here. We got the sustained break above this area, right? This was a critical level based on this horizontal level, also that 2022 trend line. We got the sustained break above. Now we're getting the sustained break back below. So this area up here becomes resistance. Now notice where yesterday's high came in, right there at that 2022 trend line. So the question now is with the euro, very similar to the DXY, is where does today's session close, right? In relation to these highs right back here. So 108.50, so these highs through here, as well as the tops of these wicks, this is what's going to matter for the euro. Right now, technically, the market is holding above this on a daily closing basis. So you have to be really careful trying to short this, especially with FOMC coming up. In my opinion, this is not the time to be shorting. If you're going to short, you want to look for this area up here. So either yesterday's high, if you got short there, in my opinion, that's a pretty good entry. Otherwise, you are looking for a move back here toward this area to potentially sweep this high up here before we get that rotation lower. But again, it is going to come down to the DXY and where this closes. Because if the DXY closes above this area today, then in my opinion, we could see a sweep with tomorrow's FOMC down here. Okay, but the odds of the DXY moving all the way down here are a lot more slim, okay, if we do get the DXY closing above 103.8. So again, it's going to come down to today's close in relation to these key areas. But again, you always want to look to short high, long low, right? That's the name of the game. So when you think about that, trying to short a market down here into key support is ill-advised, right? So maybe we get a sweep up here of this high, in which case that could be a decent short following that fake out below 1.09. All right, so let's take a look here at the pound, which has also been a nice mover over the recent days. And also, guys, I did get short here. Full disclosure, I am short here on the pound. Also the SPX, actually. But for the pound, I am short here from right around 1.28. So I got short here last week. I mentioned this in the VIP group, which if you want to join us, see the link at the top of this video for 70% off. I did mention this as I took the trade in the VIP group with my stop loss and target. So I am short from up here. I did take half off today at this 1.27 area because this is key support. We've also got FOMC coming up and also a ton of PMI out of Europe on Thursday. So I did take some profit here. It's a risk-free trade now, but ultimately the play here for the pound, the reason I got short is because of this fake out above all these highs. So from December, as well as these highs through the first part of this year, you can see where we got the fake out above this, right? So again, sustained break above, sustained break back below. This is a fake out, which means we likely get an extended move in the opposite direction. But the key for the pound, and this is going to be really critical, I can't stress this enough. If you look here, right, we have this descending channel to where right now the market is still holding above this key area. Okay, so this region around 1.264, that is going to be the area to watch tomorrow. So between 1.264 and 1.27, that is going to be critical support here for the pound. So if we were to see, following FOMC, the market close back down here, okay, down here toward these lows, then in my opinion, that is a very significant move for the pound, in which case we're looking at much lower levels, like down here around 1.24 and potentially even lower. Because a close back down here, okay, if we were to get it, would extend the fake out, this fake out up here, down here toward this entire area. So this entire area would become a fake out for the pound, this entire move, to the point where we would get, in my opinion, an extended move in the opposite direction, so lower for the pound. Now, the alternative scenario, of course, we have to weigh out both scenarios because we don't know where this market's going to go, or any market. The other scenario here would be a close back above this area, right? So all these highs back here, if following FOMC, we were to see the DXY weaken and the pound rally from this area, reclaim this up here, okay, then that would be bullish for the pound. But as of right now, though, we do have a confirmed fake out. The market does look relatively weak. And we also have, of course, the DXY rallying above that 103.6 to 103.8 area. All right, so again, guys, this is going to come down to today's close. Just be careful, though, with FOMC coming up, because even if we get the DXY closing above 103.8 today, let's just assume that it clears this area. Then with tomorrow's FOMC, maybe we see it come up here, sweep the highs, but then we're likely to see a lot of volatility here. Okay, so a lot of the people who are trying to front run FOMC, they are likely to get stopped out because we are likely to see a lot of volatility, as we always do, from these markets. So don't just assume that if we get the close up here, that the market is just going to continue higher without pulling back. All right, so really critical point there, but we are seeing the DXY on the move today. Again, close above this area here. This does flip to support. We're looking at a move up toward 104.5 and the 105 area. However, if today closes below this area, okay, so anywhere below this area down here, then we are looking at a potential pullback, a sweep of these recent lows, and a pullback into that Thursday candle. But either way, though, I am still bullish on the dollar as long as it's above this 103 area, because again, we do have a confirmed fake out right now down here in this area above 103. So this confirmed it. This was very similar to the fake out back here that got confirmed on this candle and the fake out at the start of this year that was confirmed right here. So all in all, this is starting to look pretty similar to what we've seen before. So unless this changes and we get the DXY rotating lower significantly and closing back below 103, as long as we don't get that, then I am looking for a higher dollar over the coming days and weeks. Just keep in mind, though, again, we are likely to see a lot of volatility here over the next couple of days. So be careful with your trades. In my opinion, it is best to wait till after FOMC, wait till the dust settles, and also use a wider stop if you are going to trade, because we're likely to see a lot of movement here for the dollar. Be sure to subscribe to the channel and click the bell icon for notifications, guys. Don't forget to see the link in the description of this video for 70% off VIP access. I will see you guys on the inside. Trade well out there. Be careful with the volatility coming up, and I will talk to you again tomorrow.